Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, the 3rd of June, 2024, and the time 6:30 a.m. Central Time. Before we get too far, let's take a look at tomorrow. We get Redbook Group, their retail sales data coming out at 7:55. Factory orders are going to come out at 9 o'clock. They're looking for a decline. Even though it's an increase, it's not as much as it increased the month before. Jobs data and labor turnover, the all-important JOLTS numbers. The market will focus on this at 9 o'clock. The last numbers were job openings of 8.488. More openings, strong labor market. Less openings, they're getting taken. Not as many jobs being offered. The market's going to focus on this. Then we get ADP this week. And then on the end of the week, we're going to get the U.S. jobs report. Excuse me there. API will come out with their weekly member stockpile data at 3:30, followed on Wednesday by the EIA numbers. So today we had a market that in stocks really came down hard. And in the last hour of trading, everything came alive and the buyers showed up. And you're getting a bit of follow through with it. We'll talk about that in a minute. You're trying to get a bit of a rally in the metals, but they're all under still selling pressure, including the copper market and platinum market. The dollar down as a number of currencies are trying to figure out what do they do right here. The pound came alive. We're watching the euro. So the big question is for this market, if the European Central Bank cuts interest rates, is that bullish, the euro? You know, back in January, I and other analysts were saying, no, that'd be bearish. The dollar's going to keep its interest rates higher for longer. You look for the currency with the stronger economy that pays the higher interest rate. Well, now that the U.S. is possibly, I haven't said this yet, just possibly seeing that bit of weakness coming into the economy, and they're going to cut rates, the shift has happened where traders are saying, yes, but they're cutting their rates to make their economy stronger, and we're sort of wobbling right here. Very interesting thought process. Bonds and notes paid attention to that, and we saw yields lost today. The grain markets, this is a difficult time of year if you're trying to be a grain trader, but for all practical purposes, the corn market is made in terms of planting. Not that in terms of growing by a long shot, but in terms of planting. And by the end of next week, I'd say soybeans are going to be pretty close to fully planted as well. Cotton still has a little bit of a ways to go. When you take a look at Bitcoin, it's wobbling back and forth. I found it interesting that E-Trade is considering getting rid of one of the big meme traders, Mr. Gill. And the reason is market manipulation. Shows his positions. The problem for the company is he has a lot of followers to probably trade with them. Will he lose them if they kick him out of that? From a regulator point of view, and from me, if I were running a company, you can't afford to keep Mr. Gill. And that is just because market manipulation, and your firm can be accused of it. You didn't react quick enough. You got to weigh what are the risks versus the income that you're taking in from that. I don't have the right answer. I don't speak for them. So let's take a look at what the S&P is doing. For the week, we're about flat. All right. When you look at the chart action, we can see we had distribution, sideways action. We broke to the downside. The swing line is still pointing down with lower highs and lower lows. We got down to the 5205 level. We've rallied up about 105 points. And now the market is sitting here wondering what next. Well, I can tell you, your battleground's the 18-day average of closes. Those that want to be bearish are probably selling the market here, and they're probably going to say to themselves, I'm going to put a stop over the highs of May and count on the fact the sell may go away. Now, I heard the trader said today on CNBC, the sell may go away didn't work. That is not true. Not from when I met with Yale Hirsch, it doesn't, nobody said it's May 1st that I'm aware of. It's sell in the month of May and go away. And if May's highs are taken out, then the concept doesn't work. So I differ from what they have said. And I'll count on my meeting with the man and talking to him. For me, That was good enough. Now, I know some people say it's May 1st. I don't buy into that after talking with him. Yale Hirsch developed that, and he's gone. But his son still runs it. Maybe you can write him and find out. Lower highs, lower lows, and you can see where the market's at right now. Fighting at that number. Okay, it's neither bullish or bearish just yet. When we look at the S&P, you can see that the Bollinger Bands are narrowing in. What do you think is going to move this market tomorrow morning? Not going to be the first reports in the morning. It's going to be the JOLTS data. The Fed's got to do this, or, oh, we're still too strong in labor. It's going to be that initial reaction is my importance. And what did the market do? It rallied right to the 18-day average, the line in the sand, and didn't go anywhere. This is a great time to have your hands in your pocket in this market. I feel the same in the NASDAQ. It's an identical picture. Not quite there in the Dow, but you don't have a picture like this. You have a higher high, a huge vertical drop. First resistance is probably the 100-day average, and then second, the 18. But I don't see anything that can get bullish or bearish on this chart from this action. And in the micro Russell, we had a nice run up today and the market fell back and it's under the 18. But I just see a market chopping here. I think it's more caught in the Bollinger Bands than anything. To breathe the May idea, I don't know. I think you'd have to look at really the April, only because other than this market, all the other markets made all-time highs in the month of May. We then get to the notes, and it had gotten to the Bollinger Band. What do I teach you in my Bollinger Band course? When you hit a Bollinger Band, top or bottom, if the market's not embedded, which is where the red and the blue lines that make up the K and D of it, they're not embedded, locked in. First time you hit it, that's where the pros typically take off positions, don't go into them. And that's exactly what has been happening here in this choppy area. Same thing in the 5-year notes as well. In the dollar index, we've gone from a market that was trying to stay up and over the 18-day average to one that is now well under it. Momentum pointing down. You're down to the Bollinger Band and the 100-day average. You're opening the door for a further break depending on tomorrow's data, maybe to the 103.82 level and lower. But the 200-day average is an important moving average. Pay attention with the 100. Those two have been where the market has found its support each time. In the eurocurrency, we've again slung ourselves way on up to the upper band. This is where the pros, I think, are taking money off before. We hear from the ECB this week. We'll see if I'm right or wrong. The British pound flirted with losing the embedded reading, and I'll just show you this because it's important. Let's go back another 2 days. One more. Come on, baby. Okay. So here we are on Thursday. You have a 79.50 reading, and you lose the reading on Friday, under 79. Now, the only way this market re-embeds is today. The market has to be up sharply and take both numbers over 80. And by Jove, it's exactly what it did. So this turns out to be a bear trap. The market takes off, and when that happens, you often make a run to the upper band. So we will see if that's going to be the case. Maybe the market is saying the Canadian dollar, the euro, and the pound, maybe the banks are getting ready to cut, and the market's looking at that on a favorable notion. I don't know. In Bitcoin, higher high, lower low, sort of just drifting. I don't see anything important there. As you can see, what happened in Brent. Well, if you looked at what happened, the voluntary cuts of 2 million barrels a day are going away in October, but they're not going away all at once. Over a 12-month period, they go away. So about 700,000 barrels, 750 each month will come back onto the market. The 3.66 million barrels are going to stay off the market through 2025 initially. That can all change depending on what the markets do. The marketplace, not the Saudis, not OPEC Plus, looked at that and said, more oil coming on, countries cutting interest rates because economies are weakening, and the first blush on it was bearish, and everything fell apart. You see that today, what happened here. This is how this market went. That's the news that it had to deal with, because this news all came out yesterday, Sunday. And as you can see what you're doing, I think you're oversold, maybe an overreaction on the market's part, but certainly no reason to be a buyer and no reason to go into the OPEC meeting. That I can tell you. As for gasoline, I was hoping the market was going to try to go back into the seasonality where normally you start the driving season. If you go to the seasonals, it's June and July, and that's when you get your rally. The lower you go, even if you get a rally, where are you going? All these moving averages are major resistance in the marketplace. This market's coming down, and the Biden administration has to applaud themselves. They're keeping those prices down. Tomorrow, President Biden's talking of signing an executive order to shut off 2/3 of the immigration that is taking place. Why? Because he's listening to the voters and he's saying to himself, well, that's what they want. Now, it'll be challenged in the courts and so on. Where's the money going to come for the things he's doing? But he's getting closer to the Trump position, which makes all the sense in the world. If he wants to win the election, you've got to nullify. I'm not letting people in. Oh, those 18 million or whatever, don't count them. This is where we're at, of course. But it's helped. It's kept labor costs down. You can't argue that. These people are taking jobs and they're feeding into the economy. Higher high, lower low. I'm not getting into the safety issues of them, how they're here. I don't care. That's not what we're dealing with. Nothing there. But I think natural gas is giving you a story. I was looking today in Sacramento, they're going to be 104 tomorrow. The heat wave's coming back already into the California region. What happens is it spreads across the country. I don't think you want to be short natural gas anymore. I think you're looking for ways to get long. I know that in my ETF video, we had our first buy signal in this market, and we'll see if it's going to hold up. It was today, and it got filled, and we'll see if that's going to hold or not. But that it fell right where it should have if you were going to be a buyer. Now, ETFs trade a bit different than the futures, but it's based on natural gas. We will see where this story is going to carry you. So if you're interested in what we do, in the research and what we talk about, we have two full-time, while we're talking natural gas, we have two people that are on our staff, one in-house, one out-of-house, that are just meteorologists. They give us, because of grains, how are things going around the world? What's the weather doing? How hot is it? What's the forecast? And I can tell you, they're starting to say the forecasts are starting to pick up, and you've got to be a bit careful. The heat is going to get extreme out west, so you want to pay attention. We cover all these markets with special reports, special chart analysis, and so on. If you haven't had our research, give it a try. It's at iraepstein.com under free offers. It can't be any simpler. iraepstein.com under free offers, or move your cursor to the top here and take it that way. With that, I'm Ira Epstein. You have yourself a good day. Have a good evening if you're trading tonight, and I'll pick up with you first thing in the morning. Take care.